How's it going, everybody? This is Derek Quick with Financial Fortune. Today I want to talk about inflation and how I am going to hedge if there is a stock market somewhat correction again, and if we continue to see inflation rise. I'm going to go over exactly how I'm going to hedge that, and I'll just be straight up with you. It's going to be with uranium, and I'm talking about uranium stocks. I'm going to go into exactly the signs of inflation. Michael Burry, he actually was, the big short. He's been talking about inflation and hyperinflation for a while. I'm going to go into all of that, but please first hit that like and subscribe button below. So first things first, with inflation, a lot of times we see really good commodity prices, commodity runs, and we've been seeing that. So this is the first telltale sign. On this chart here, as you can see, we have had crazy runs, some of the biggest in lumber in history in the last year. We actually are right now hitting all-time highs in copper and palladium. So if you see this chart, there's a 1-year performance. Almost everything's up other than like orange juice and rough rice. But from what you can see here, what I'm talking about is uranium, and really uranium is not on this chart particular. Uranium is a very essential needed fuel for our nuclear reactors, and it's at a very low price right now, but I'm going to go into detail why that's about to change very soon and how it's going to help you hedge in an inflationary crisis that we see us going into right now. So Michael Burry, before his Twitter account he deleted, he was giving out some crazy valuable information, and one of those things he was talking about was obviously inflation. He said, prepare for inflation. This was back in February 19th. He said the reopening and stimulus on the way. With pre-COVID, it took $3 of debt to create $1 GDP. And it's worse now. And in an inflationary crisis, governments will move to squash competitors in the currency arena. And that's Bitcoin and gold is what he hashtagged. So what I'm looking at here is, obviously he's been talking about this for a while. He's the big short. He bet on the housing market crisis, the crash, and won a lot. He was right. A lot of people thought he was crazy. There was a movie about it. You can see it, but he's calling for it again. And when people like this, they dedicate their life to it, you want to probably listen to them. What is the first telltale sign? Like I said, commodities. Second thing, we're starting to see historical prices in food. If you look at, go look up on Twitter, like some of the most trending things right now. This is what people are talking about. One of the things that I find interesting is called shrinkflation, and it's usually what you see prior to inflation. So companies are trying to, instead of raising all the prices like double, like we saw in Germany in the 1920s, with food, literally in the day you could buy a cup of coffee, and it could be double within 10 minutes. So people would in Germany buy 2 cups of coffee. But you see here in shrinkflation, the bag of Doritos was 200 grams, and then after they dropped it by a mere 20 grams. Things get smaller. They do repackaging, so you don't even notice it. They change the sizing of the serving size. So you think like, oh, it's 70 calories so I can lose weight. But it's like, it's just really to save them money because things are going up. The cost to make these products, the cost to import them from overseas, depending where it's at. And through the years, it's got crazy. Some stuff, double, triple the price in the last few years sometimes. It's ridiculous right now. I tell you to go look at your Amazon cart from 3-4 years ago. And these are things that could be, still in the United States. It doesn't necessarily mean it's just because it's being imported. It could be things being made here. Some of the stuff is double, triple the price. But these are the first signs. So like I said, I'm going to be in hedging with uranium stocks. But before I go into that, I want to go into kind of what's going on here in America. So the minimum wage has been a big topic. You can see companies are raising this minimum wage, but depending what state you're in, it could be very low. It could be $7 in Alabama. California, this is what it's saying here. It's $13, but I know like at a lot of companies there, like in and out, right out of high school or in high school, you can get a job for like $15 an hour. I think it might be more, 15 or 16. So this is a big topic. This is another thing we saw in Germany during their inflation and hyperinflation crisis. The minimum wage, crazy gap. People were complaining about the cost of living. I'll show you some of those tweets in a second. But first, before we get to those tweets, how do we get to this inflationary crisis? Obviously, I think the first thing is, obviously we're printing a lot of money. In the last year, people are getting money sent to them, these stimulus checks. A lot of people aren't working, small businesses. I had two companies, I'm not actually able to utilize those companies right now that I created because of, the lockdowns and just the whole market in general. So hurting small businesses. But it's really a loss it's a loss of faith in the system and the faith of the currency. So a loss in faith of the currency. So a lot of people are turning to Bitcoin. We'll talk about that in a little bit too, where I see that going. Is it a hedge? And is it being utilized right now by certain people and companies? And the government, as Michael J. Burry said, will probably try to squash competitors with the US dollar. And that's what we're seeing right now. But in this history, German labor unions really kind of woke up in the 1920s. They were trying to get their minimum wage or their wages increased and things like that. But this is going on. You look at Twitter. This was, a couple of days ago, it was trending. It was like number one or close to it. Basically, people are saying no one wants to work anymore. CEOs are making 320 times more than the average worker. I did see a really sad one. One lady, she is a professional. I think she had an MBA, and she said, the same job she worked at when she lived in Atlanta, Georgia, that her rent was like, I think it was close to like 800, and now like a few years later, it's like 3 to 4 times the price. And she actually just with a little wage increase, even with her job, it barely pays anything. Her cost of living and bills, even in a small place like I was telling you, a small minimum wage there in Alabama, which is $7. So you think that would balance out with the cost of living and housing prices, but it's not. So a lot of people are being woke to this. Obviously, a lot of them are not wanting to go into their jobs because they see it as a risk. And also they see it's not worth it, especially if they could just be at home and get, a check in some instances. But I do see a big problem with this. People are getting stimulus checks. That's why I think the market is also ran. A lot of people that I know are doing a lot better, trading the market, but it's not going to always happen that way. In an inflationary crisis, the markets can do good. But if we ever get to hyperinflation, which Michael J. Burry said he doesn't see that happening, we, at least not yet, inflation for a while can be good in the markets because they adjust. But if you have money just sitting around, it's going to be a bad thing. One thing that you can see with commodities, like I said, we've had these record prices, lumber, iron ore, they've climbed to record highs. You just Google it, or on this Microsoft Bing. One thing that's happened is there's been a lot of collectibles. Target halted the sale of these trading cards, Pokemon cards, video games, or sports cards, and this is pretty big because when in Germany, a lot of people that didn't even have a piano or didn't even play the piano, they were buying up pianos because they knew that the value of their money was going down, so they wanted to put it in assets. And a lot of times, during these inflation crises, people will put their money into things like this, like gold, collectibles. My buddy Lewis Morgan, he actually bought 2 packs of these cards from Logan Paul that Logan Paul did great marketing, made a lot of money, but these were $2.99. These were cards that I bought, and he paid close to was $103,000 altogether for these, which is insane. I mean, do the markups on that. It's insane. But our these newer investors, the new generation coming in the marketplace, are these their Mona Lisas? Are these rare Charizards, PSA 10s, their Mona Lisas selling for $480,000? Like that specific card, like I had when I was, 13 years old. And, and I kept it fairly, I cared for it. So this generation, I don't have it anymore, obviously, but this generation, I think, is a little different. And I do think that a good hedge will be in commodities, especially uranium. We'll go into detail, like I said, in a minute on why. But if you look back in history, Michael J. Burry said that 1970s were the best times that we could study on inflation in the US. And we're seeing a lot of the exact same things happening. I'm talking about the gas lines. We had an oil crisis then, an energy crisis. So back in 79, oil production plunged in the wake of the Iranian Revolution and the coming Iran-Iraq war. The price of crude oil soared over the next year, more than doubling. The price spike prompted fuel shortages and long lines at the US gas stations. We're seeing that today. But this is over some other things. Obviously, there's been some issues with the pipelines. But it got so bad that motorists in America were forced to buy gas depending on their license plates. These things have happened, and I see a energy crisis in the uranium market because the uranium market is unlike any market in the world, and I'll show you right here. Right now, in the past few years, uranium prices really haven't moved too crazily. We have started to see an uptick this year because there is a shortage. There's a bigger supply or less supply, a bigger demand. And if you look at the chart, the all-time chart here, you can see that these uranium spot prices went up to about $136 long-term, close to $100. And this was in a fairly short period. This made uranium stocks run hundreds of thousands of percent for some of them. Most of them 10,000% in a short amount of time. We do an inflation calculator to that $136. It's going to be $175. But I think it's going to go up to $200. And that will make uranium stocks in this new market, this new stock market, do life-changing gains. As I've always said, the inflation calculator website, it's actually saying the energy 25% increase, the 12-month CPI that ended last month. That's huge. We're going to see this. We're going to see this. Energy companies, they're going to want to, these nuclear power plants, these fuel buyers, they're going to want to buy long-term contracts in uranium. Uranium, biggest hedge. That's what I'm going to be doing. I think these stocks are going to do, great gains with just the commodities push, but with the stock market correction somewhat, or inflation going up, we're going to see that price in uranium adjust. This was the German stock market. I just want to show it. The German stock market during this time of inflation, hyperinflation, you could see that it's tried to balance itself out. If you just had your money in just cash, you were done for pretty much. But the market for a little bit, but when hyperinflation comes in, I like to say it's like the black hole, like in space, it just sucks everything up, even no matter what you're in, no matter what commodity. There were people in Germany that did really well during this time. They were usually in the financial markets. They knew what to do with their money and where to put it. And I think in this go round, if we have some big inflation, I think uranium is going to be the best place. Possibly Bitcoin, but as Michael J. Burry said, it could be a big competitor. Now, one thing about Bitcoin, and we'll end this with this, Bitcoin, it is risky. We have seen a big drop, 63,000 April 14th. Month later, 49,000. That's a pretty big drop. If you put your life savings in there. So we did see Elon Musk backtrack on Bitcoin as well. This is really this ESG movement. If you look at Bitcoin, most of it's mined, I believe, in China. From what I've read, I'm not an expert on Bitcoin, but they do consume a lot of electricity, and they're going to need more. And a lot of the electricity where they mine it is mined with coal. And this is putting out a lot of greenhouse gases. So Elon has kind of been slammed for this because he kind of was like obviously pushing it. But Bitcoin is obviously not the dollar, and there is a finite supply of it. So if we ever had hyperinflation, this is just the speculation part. I think Bitcoin or crypto in general could be kind of like in 1924 after this hyperinflation in Germany, they kind of reset. Could the government reset with a federal coin? But right now we need to look at the signs in front of us. You got to look at the things I showed you, and then uranium. Soon in the next couple months, basically it's changing the whole game for the whole sector. Most of the time, these uranium contracts are done in long-term contracts. It's 80%. And 20% of the uranium buying is the spot market. Now, with the spot market, we've kind of always had somewhat manipulation in it. And I think, and it's not really good for the uranium market, but I think what's about to happen with Sprott taking over UPC, they're going to pretty much be a market maker. They're going to be taking up all the supply of spot uranium, so these utility companies can't just go in there and say, yeah, we're going to fill up our gas tank. We're going to top it up. We're not going to do long-term contracts yet. Without supply, with these mines getting closed up, shut down, one of the biggest mines the other day, they had a few more cases and in Cameco, so we could see more shutdowns. It's going to be crazy. They're going to be raising money as their manager, Sprott is, for UPC, and they're going to be buying up all this excess supply of spot uranium. And this is really kind of what happened. One of the things that happened, not with them buying, but the spot price going up last time. Utility companies got nervous because of the shutdowns. There was mine floods and things like that. This is on a bigger scale. This is way bigger. This is going to be a crazy run in uranium. And if you're hedged right with uranium stocks, these stocks market caps are still very small, a lot of them. And when the market gets in this, when these become even meme stocks, they're going to do crazy runs. And if you can get in early, the compounding that it'll do on the back end is life-changing. And you can have swings for the market. It could be 100%, but I always tell people this: if you got in early, if you got with me March of last year, those swings could be 5,000% in a day for you. If you got in, a few cents, and this thing's trading obviously over $1. A lot of these are. So ending this, people that did well during this hyperinflation period, especially inflation, they were speculators, industrialists, goods exporters, and they were connected with the financial elite. Well, guess what? The internet connects everyone now. All this information pretty much is at the tip of your fingers. You're watching this video now, so now you know. Michael J. Burry, last thing I'll leave with this. He said, people say I didn't warn them last time. This is about the Big Short. I did, but no one listened. So I warned this time, and still no one listens. But I will have proof that I warned. And my proof to you guys is I'm telling you that uranium will go to $200. I don't know when. And some of it's because of inflation, some of it's because supply strains, and some of it's because this is just the cycle. Uranium bull markets come, every 10, 20 years. We see these cycles, but no bull market is ever going to be like this ever again, I don't think. And this is going to be the ones where people make tons of money. I know I'm going to make a lot of money. I know some of my best friends. I know Lewis Morgan, the one that bought those crazy Pokemon cards, he's going to be making 9 to 10 figures from uranium. He's already highly invested now in uranium. I tried to get him in last March of 2020. He would be up $100+ million if he invested then, but he just couldn't get his head wrapped around it. So if you want to learn more about uranium and you don't want to make the mistake Lewis made by not getting in when I told him initially, watch my other videos on uranium below, and please hit that like and subscribe button. Don't forget, I told you, I warned you, $200 uranium.